This instruction demonstrates how to run and troubleshoot the unbilled reconciliation. In JAMIS Prime, you identify unbilled amounts, recognize variances, and troubleshoot the reconciliation differences to maintain accurate financial records. Begin on the Unbilled Reconciliation form. Enter the period to reconcile, and enter the general ledger account for the unbilled account. The results display in the grid the difference between the general ledger transactions and the job cost transactions for the period entered. The unbilled column calculates the difference between revenue recognized minus the billed amount for the period entered. The variance calculates the difference between the general ledger total and the unbilled. Both the unbilled and the variance need to be identified and corrected if necessary. A project in the results displays an unbilled. Unbilled shows the difference of the total revenue amount minus the total billed amount from job cost. To begin analyzing, click Job Cost Detail. In the job cost detail, there is a difference between the total billed amount and the total revenue amount for some of the transactions. To continue analyzing the reason for the unbilled, go to the Contracts form. Close the job cost detail, then search for Contracts. Now on the Contracts form, click Projects. Note the project is a cost plus billing type. For cost plus billing types, the cost plus the burdens determine the amount billed and recognized for revenue. Click Financial Settings. To view, the provisional rates are selected for billing and the target rates are selected for revenue. Next, go to the Burden Pools form. View the provisional rates applied for billing and note the target rates applied for revenue recognition are different. Since the rates applied to the cost for billing are different than the rates applied to revenue, there is a rate variance in the unbilled account. Now go to the job cost transaction detail to determine the exact amount of the rate variance. After you filter to the time period and the project you're reconciling, export to Excel and create a pivot table of the details. Compare all job cost transaction billed amounts to the revenue amounts. The difference is in the burden rates, as expected, since the provisional rates used for billing are different than the target rates used for revenue recognition. The difference of the burdens applied plus the fee calculated on those costs creates the rate variance calculated. In addition to the rate variance, there's also retention withheld on the invoice. Retention's an additional unbilled between revenue and billing. The rate variance plus the retention total the unbilled amount on the Unbilled Reconciliation form. In this example, no issues need correcting. The rate variance is reduced when revised provisional billing is completed after new rates are approved. Retention is invoiced on the final billing. Return to the Unbilled Reconciliation form to resolve other differences. Returning to the Unbilled Reconciliation form, another project has an unbilled. Go to the Contracts form for the contract with the unbilled to begin determining the reason for the unbilled. Once on the Contracts form, go to Projects. The project from the Unbilled Reconciliation is a fixed price billing type. Fixed price billing types and fixed amount based revenue methods are based on milestones. Click Project Details to open, followed by Milestones. And you see in the grid, the revenue milestone is recognized for this period. However, the billing milestone for this period has not yet been invoiced. When the milestone is invoiced, the unbilled difference goes to 0. Return to the Unbilled Reconciliation form by closing the project and searching for Unbilled Reconciliation to resolve any additional differences. One project has a negative unbilled amount and a positive variance of the same amount. To identify the cause of the difference, view Job Cost Detail and see an amount equal to that of the difference. Click View Source Document to view the invoice details. In the project billing batch, the invoice details shows an amount equal to the variance, which represents sales tax invoiced. Sales tax is not recognized for revenue. Therefore, it does create an unbilled amount. Sales tax does not post to the unbilled general ledger account. Sales tax is posted to the sales tax general ledger account, creating a variance. Return to the Unbilled Reconciliation by closing the open dialog boxes. In JAMIS Prime, you identify unbilled amounts, recognize variances, and troubleshoot the reconciliation differences to maintain accurate financial records, ensure compliance with government regulations, and improve cash flow management.